Welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hanf of Pacific Private Money, California's fastest-growing mortgage investment firm, and Robert Spinoza of RPM Mortgage. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco, and the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511, and today's trivia theme is names. Except for in one case, I think we have initials. But anyway, close enough. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. We're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. That is a mouthful. Today's special guest is Mike Zaidlin. We've had him on the show before. Welcome, Mike.
Thank you. It's great to be here, Edward.
Good. He is an investment advisor. Fine, right? Okay, now get this. Here's the question. Here's the point. He's going to discuss IRAs and 401ks too. Should you have one? Now, the obvious answer, we go, sure, of course you should have one.
Right.
Okay, so
Not quite that simple.
Maybe not. Go ahead, take it away, Mike.
Well, that question really is part of a larger question of you probably, if you have a 401k, you should always try and get the match.
Sure.
Because that's
free money.
Only 100% investment return you're ever going to be guaranteed to get. But then the real question comes in of whether you should have an IRA or keep contributing to a 401k. That question comes in and really depends on many factors, probably the most important of which is what's your marginal tax rate at that time.
Okay.
If your marginal tax rate is really low, once you've got the match from a 401k, you're really not getting much benefit from contributing to an IRA or a 401k because you will end up being in an account that is tax deferred, that will be taxed without having given you the benefit of having deferred any tax up front. So when you're later on in life withdrawing and you're in a higher tax rate than when you were making the contribution, you're going to be hurt by that. The better alternative is probably, since you're not getting any benefit up front from the tax deferral, an IRA or 401k is putting it into a Roth 401k if your 401k plan has one, or a Roth IRA, or if for one reason or another you don't have a Roth 401k or something suitable like that, you are better off than putting it in a taxable account where you can at least get the benefit of investing in an equity fund, say, and getting a stepped-up basis and the benefit of capital gains and qualified dividends tax treatment. So it gets a little involved.
Yeah, because you don't get any capital gains benefit by having it in a retirement account. You lose it. Right. Basically, it's all ordinary income when it comes out.
Absolutely, and of course the other thing is when the money you're putting into a retirement account is money you, in theory, can't spend. So since I love to spend money,
well, we see a lot of people spending their IRA money, but then it's coming out with penalty.
Exactly, and of course, if you really aren't getting a benefit from an IRA, of course it should just go to a Roth IRA.
Right.
Or if you have young kids, a 529 plan, which is basically a Roth for college.
Okay, I didn't know that, and that's a great question because my wife and I are saving in a 529 for our kids' college, and I've heard various things about 529s and their efficiency in accomplishing that goal.
Yeah, I think I often see people coming in with UTMA accounts, which are trusts, but the problem is those are all taxable. They would have been, almost everyone would have been better off with the 529 if it's going to be used for college.
Well, it's like the HSAs. I mean, I love those health savings accounts. Yeah, because it's like a big IRA.
Right.
Yeah.
So, Mike, are you saying that if someone's in a certain tax bracket, that it might not be a good idea at all, tax planning wise, to let's say open up a Roth IRA account to maybe invest in alternative assets or real estate that could grow, presumably rather quickly and large for your to have tax free in your retirement?
Yeah, I would say alternative investments, trust deeds, or even just owning real estate is definitely something that always has to be compared with all the other investment alternatives, depending on the type of account and other factors, marginal brackets and so forth.
So if we're talking about someone, I have an article I brought here. I didn't know if we were going to get to cover it, but I'm going to try and tie a couple of things here together. I work in home finance, so when people go to buy a house, especially first-time home buyers, which are a key segment of the real estate health, real estate economy's health, if those individuals are in a lower tax bracket now, is it worthwhile for them to save to buy a home in lieu of contributing to a retirement that otherwise might be tax inefficient down the road?
You know, I think it becomes a bit of a personal issue at a certain point. I think no one could really dispute that real estate is probably a better investment than stocks and bonds in general, and regardless of whatever account you have them in. Real estate has multiple types of utilitarian value, tax breaks for the first $500,000 if you're married, so on. But mostly the utilitarian value of it, as well as its inherent inflation protection.
Okay, just for fun, because you were here.
Mark and I already like this guy.
Just for fun, before we went on air, I was showing Mike. I said, "Have you ever seen this chart?" And it's a scary parallel between the stock market of today at the Dow Jones and that of 1929. It looks kind of similar. Okay, and I'm going to show
audience.
I'm
Can
going
you see
to show it to the TV audience here.
So describe to the radio audience exactly what you're showing.
Okay, this is a chart that basically looks fairly close for the period of 1928 to 1929 and compared to going from July 2012 to today. And it's pretty close, all right? And Mike, go ahead and tell us.
I have a feeling I'm being set up.
You are, well, but you know the answer because you entertained us.
Couple of guys sitting around the bar setting up the guests.
Yeah.
So, just the way the world works, there are always patterns that we think are patterns, but are really statistical randomness. But the human mind needs to see patterns to make sense of the world, just psychologically. And as I was saying earlier, if you really wanted to, if you were going to act on that pattern, logically you would need to go and say, well, how many other patterns would there have been in the last 70 or 80 years that would have led me astray?
Yeah, sometimes it was the Super Bowl.
Good point.
Yeah, get this, okay? Drum roll, please. You're never going to guess this. Go ahead.
It turns out that the
Get ready.
The highest correlation to the performance of the Dow Jones is actually, of all the factors in the world that have ever been seen, is the annual production of butter in Bangladesh.
Oh, okay.
That's
I thought
the
you were
biggest
going to
predictor.
And for how many years?
I put that. So, well, how long has Bangladesh been a country? 1947, maybe.
Yeah.
So for 70 years. So you want to track one index against the other.
Maybe because when you do a lot of butter, people become happy with all the fat and
I don't know.
invest.
Well, you're a betting man, Edward, so go for it.
Yeah. Well, I mean, how does one find out what the production of Bangladesh butter is now?
How do you know to look for that stat? But one of the things I think is interesting about that is we look at charts, for example, the 10-year Treasury, the 30-year Fannie Mae coupons. We look at those all the time, and I watch these chartist guys draw lines on the trend.
Yeah.
How do you pick the top and bottom? They can draw a line between any of those and come up with a trend.
That's a good point because I used to do technical analysis when I was younger, and it's very easy to look back, and 20/20 hindsight say, oh yeah, there it was. That is the hard part, is figuring out, oh, when did it go through the flag and
exactly
and inverted head and shoulders and all that kind of stuff. I know all that stuff. Okay, tell you what, we're going to cut to a quick commercial break here. Again, the theme is names. What was the family name of Danny and his 3 daughters who appeared in the TV show Full House? I didn't really watch the show, so I didn't get this one. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. This is probably for people who are a little bit younger audience, I guess. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What was the family name of Danny and his 3 daughters who appeared in the TV show Full House? Make sure to include your name and your email address. Speak slowly, spell out your email 1 letter at a time. Don't touch that dial. The best of investing will be right back. All right. So we'll come back and I'll let you tell people how to get hold of you, and then we'll move on to the things. Is that okay? Butter in Bangladesh. Now I gotta look that up.
Butter production. How do you spell your last name?
Zaidlin with a Z.
Let's give a little plug too about The fact that the thing that's really cool about Mike, he
Just
doesn't
one
like.
thing?
Ooh, excuse me. The one of the many cool things. Mike doesn't charge. He doesn't do like commissionable products. He doesn't do that.
Fee-based.
Right?
Yeah.
No,
Is-
but he doesn't do percentage of assets.
Okay.
He does it just hey, the job is worth this.
Oh, okay. Got it.
Very nice.
Naturally, I don't make as much money,
But you know what?
that's why I'm over here.
You know what I'm finding in my line of work is the people are
It's in the
shopping
show.
on a different level now, and they see the value in that. And you know,
Your office is, okay.
yeah, we are next door to what used to be Pinell,
Oh, yeah.
North
sure,
Strawberry.
sure.
Yeah.
Is there a daycare school nearby?
There is.
But I know exactly where it is.
Segment.
Are
They're
you,
up.
are you from Marin, or have you lived here a long
Not
time?
my whole life. I moved here in 2001. Yeah.
What is RPMs? Well,
Residential Pacific.
oh, okay.
Interesting times in our.
Uh-huh.
As you might
Oh,
imagine.
You know, I was bringing a client over to see Mark next week.
I followed up with Damon. That looks
Damon Bowers,
Damon
yeah.
Bowers. That looks like that's going to actually go.
Oh, really?
Yeah.
That's fabulous.
Can I have another question? Take off mine. Okay.
Okay. You ready?
Let's hit it. Hit it.
Otis Day of the Nights.
Otis, my man.
Otis, my man. Yeah. Sorry. Okay.
You're a channel on a ding.
That's right. What are you studying? Primitive culture. Okay, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt and Robert Spinoza. When we cut to the first commercial break, we asked this trivia question again. The theme is names. What was the family name of Danny and his three daughters who appeared in the TV show Full House? Anyone ever watch the show?
Huxtables.
No, that's the Cosbys.
Partridge.
No, that's the Partridge Family.
No.
The Cleavers?
No, but
Brady.
oh my gosh. Okay, no, Tanner. I know we're all.
My daughter would have known that. She loves watching those old.
My wife would have known that.
Okay.
Yeah.
There we go. We're also in the studio here with Mike Zaidlin, who's an investment advisor, who's been teaching us how to predict the stock market with Bangladesh butter. If you missed the first segment,
It actually has multiple uses.
is production of Bangladesh butter apparently a fairly accurate
predictor of
the
Wow,
Dow?
so far.
Wow.
We'll see that. Of course, when everybody starts following it, then it'll change.
cease.
So you got to be it's supposed to be a
Don't
secret.
tell the hedge funds.
Yeah, exactly. That's right. So, Mike, I was going to give you a little plug here because one of the nice things about working with Mike as an investment advisor, he doesn't charge a commission, but he also doesn't charge a percentage of assets, which a lot of guys do, so that he's doing a little bit more of the, charging either by the hour or by the job.
A la
So,
carte.
Basically,
Yeah,
right? So, Mike, we're going to move on. So, I want people to give you a
Well, I
call.
thought we were just getting started.
I'm sorry. No, don't worry. You can still pipe in for all this other fun stuff because you're an intelligent guy. How do people get a hold of you if they want to buy some Bangladesh butter? No, I was kidding. If they want some other advice about IRAs or just in
Sure.
general.
Well, I can be reached at 415-706-1519.
And also, Mike's quite a baseball historian like I am.
Oh, wow.
So if you have
Okay.
baseball questions, you can
Now we're
ask.
talking.
Now we're talking, exactly.
The
Forget all
fun
this
stuff.
business stuff, go on to that. Okay, hey guys, you know what? We received a couple of really interesting emails. I want to just get right into this here. For Mark, are the new restrictions on loans helping or hurting your business? Am I better off investing with you now, or should I have before the changes? little 2020 hindsight.
Yeah, a little late if you haven't invested yet. So, so our company, Pacific Private Money, we have a mortgage pool fund that we use to make loans to real estate investors. And we've made over 600 loans to real estate investors since 2009. And these are usually short-term loans at relatively high interest rates to rehabbers and contractors and other real estate investors who are buying, fixing, and flipping real estate. And that's still going on. It's been going on for the last, 3 or 4 years, hot and heavy. And notwithstanding what you might read in other real estate articles, there are still plenty of people out there who are finding opportunities to buy a property add value by remodeling it and putting it back on the market and selling it for a profit. Now, the banks don't make loans to guys like that for a couple of reasons. One, a lot of these guys don't have the greatest credit in the world because a lot of them were real estate investors when the market turned, and they may have a foreclosure or a short sale on their record. But also, generally speaking, in today's market, since it is fairly tight to find good deals, you usually have to be aggressive in the offer. And so you make a very fast, aggressive offer, low or no contingency, no loan contingency. Usually they're making an all-cash offer with a quick close in 2 weeks. Now, banks are not able to generally accommodate that kind of quick close financing, and so it's been a really, really strong market for the private lending market. We used to call ourselves the hard money lenders, but most of us nowadays prefer the term private lender, hence the name of my company, Pacific Private Money. So we make privately funded loans to these real estate investors, and we're charging them anywhere from 9 to 11% because they're only using the money for anywhere from 6 months to a year. And what's really great about that type of loan product is that it presents an opportunity for private individuals like yourselves out there in the listening audience to participate in those high yields because we use private individual capital for that money. We're not a bank, but we make bank-type loans, bank-like loans. The loans that we make are really no different than the banks make, other than the rates and the fees are higher. But the paperwork we use, the legal basis for them, the note, the deed of trust, they're all pretty much identical, and they all go through escrow companies like a bank would. So that's a little bit of a backdrop. So the question was, has the recent changes, which have really been restrictions on lending, have they affected our business positively or negatively? And well, I want to say the jury is still out, but by and large, if anything, I'm guessing it's actually going to help us out, because if to the extent that people are less able to borrow from a bank, presumably they might be more able to borrow privately, assuming that they can live with the type of rates and fees. Now, probably the more correct answer is it really doesn't have a whole lot of effect. And the answer, the reason why, is because banks generally make loans to consumers, and companies like Pacific Private Money, we make loans to real estate investors. Right. And never the twain shall meet, right? So
okay, but is your business more correlated with the production of butter in Bangladesh?
That,
like the Dow?
That I am not sure. I'm going to have to go check that chart and measure it against private. Now, private lending has exploded as an industry since 2009.
Yeah, it's not the best kept secret anymore.
It's one of the better kept secrets in how you can earn a better yield on your savings than you can generally find at the bank or through CDs or bonds. The stock market, well, the jury's out on that too, because if you didn't get in over a year ago, you're not enjoying the fact that it's up 25% year over year, but you're kind of going, is now a good time to get in? So if you're a little bit concerned about what might happen with stock prices this year, and you're looking to maybe hedge that with some alternative investment strategies to boost your yield, you might want to consider taking a look at our mortgage pool fund product. We call it the Pacific Private Money Fund, and you can find more information by going to our website, which is called, surprisingly, pacificmoneyfund.com. That's pacificmoneyfund.com. You can find more information on there, and there's an easy way for you to fill out a very brief form, name and email address, and shoot it over to us. And in return, you'll get an email with some detailed descriptions of exactly how that fund works, things like risk factors, etc. So give us a shout by phone. 415-883-2150 is the office number for Pacific Private Money, 415-883-2150.
Okay, and before we get into your...
I was just going to add something.
Oh, go ahead. I'm sorry. Go ahead.
So what Mark had to say, not a week goes by, Mark, where I don't see one of my pre-approved buyers offering on a property that was fixed and flipped. I mean, there's just... if you're an investor out there and you're thinking about an investment, and maybe you look at private money and getting into real estate and you think, gee, this is risky. Well, let me tell you a little bit about the light at the end of the tunnel. And it's putting a house on a market like we have right now in the Bay Area, where there's very low inventory, and you are putting a turnkey residence back on the market that people are going to clamor over. And I'm seeing a ton of that out there, but you've got to have the ability to get into those properties when they're not in that condition, rehab them, and take the risks inherent in that, the possibly on the investment side, you have the option of benefiting from that as well.
Absolutely.
Yeah.
I have a question, Mark. What are the general loan to values of the properties in the fund?
Well, and thank you for asking, because that's the thing I did not say, is that we actually lend very conservatively. So we generally don't go higher than 70% loan to purchase price for the loans that we make to the real estate investors. So we tend to work with real estate investors that are well capitalized or have their own source of equity, because we don't do 100% financing.
Right.
We're not out there making risky loans, and of course banks will make loans at 80% and higher. Frequently for consumer home loans, we make loans on investment property usually capped at 70% of the purchase price. So not only that, the buyers are improving the properties. By the time they put them on the market, our LTV exposure, our loan to value exposure, is usually below 50%.
Yeah.
So we're very well secured, and in my opinion, fairly conservative for the type of yield you can get, which our fund right now is paying about 8.5% interest on an annual basis to our shareholders.
Okay. Before we get to Robert here, I do want to give and I promised this lady I would do this, a special recognition to a lady named Holly Nichols of American Cupcake on Union Street in San Francisco. Let me tell you what happened. My daughter accidentally left her purse there, and this lady's the manager, and she had found it and then put it like underneath the counter, right? Then somebody had decided to move it to the back office. Still, there was no lock. There's no place to lock it up, right? So my daughter, she finds out that, her purse is there, right? So she goes there. Turns out the purse is gone. And it's like, oh my gosh, what do we do, right? So this lady has the integrity and honesty to say, we'll make a list of stuff, the cost of the purse plus the what you honestly believe was in the purse, and we will reimburse you.
Wow.
I mean, and
I
was on the phone. I said, "Are you serious?" And sure enough, Sarah was very honest. She listed everything. Went back there, and it was like $300 because she had some cash. She had some, I forget the time value of having to go to the DMV. No one can reimburse you for that. They literally gave her $300 cash.
Wow,
Isn't that amazing? So
what's the name of the place again?
It's called American Cupcake on Union Street in San Francisco. Ask for Holly Nichols. It's nice to know that humanity has got some good stuff.
Good for you. Yeah.
Good. Okay, we'll tell you what, Robert. We do have to cut to a commercial break. So when we come back, Robert, we have a very interesting question for Robert here. Again, our trivia theme is names. What was the nickname of Charles Luciano, who's considered the founder of modern organized crime in America? What was his nickname? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190, to answer this question. What was the nickname of Charles Luciano, who is considered the founder of modern organized crime in America? Don't touch that dial. The best of investing. We'll be right back.
Bugsy.
Bugsy Malone.
That was there you go. I mean, so no financing.
There he is.
No inspection.
Hey, you're nice and early. We just have a couple more segments.
Sure. All cash.
And look who we have as a guest today for our radio show, our business show.
We got a little more room here. Come on over.
Yeah.
They just knocked on
I
the
don't
door.
know. None of us know. I've asked. I showed it to one other person in my office, and they're like,
The alchemy behind winning
that's
gigs
Kramer?
is Wall Street
Kramer,
Journal.
Steve Travers.
Hi,
How you doing?
multiple
Good.
offers. We see so much in Marin.
Oh, here.
So is this from Wall Street?
sounds like it. Yeah.
Not the Throckmorton percentage.
No, exactly. Yeah, not Throckmorton.
I had 10 offers this week.
I don't think anybody took it seriously when I said the Bangladesh thing. They're not going to run out, and I'm going to be in trouble with the SEC. What do you think? Should I put a disclaimer out there, or is it
No,
obviously
I
a
would.
joke?
You didn't guarantee anything. You just said that you see that you heard that there's a correlation.
Yeah. Okay.
I guess you got to think about that.
It kind of,
I mean, I'm
I
trusting
think
that.
I'll let it go.
I mean,
See
it
where
really.
I'm at.
I
See how
assume
many SEC people are at my door tomorrow morning.
I mean, I assume that it really is. You didn't just throw that out there.
No.
You've actually seen something. Yeah, that's what I think.
Wow, I'm amazed by that one. No inspection contingency, really? I hope you're going to walk through the house at least once before you buy it. Okay. What that's basically saying is they're taking the house as is.
Yeah,
They're not going to go through and get a punch list,
Right.
which actually is problematic, I think, for people through rehab, because I know some of my rehab customers
you can end up
who
in a
are rehabbing
primary.
in Oakland, they do a good to great job, but no one's ever perfect. I mean, there's always
Right.
stuff that's kind of like you usually move in, buyer moves in, there's a punch list of things you ask the seller come in and fix these
Yes,
things.
is it?
Yep.
Very good. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money, and Robert Spinoza of RPM Mortgage. Here's the trivia question. What was the nickname of Charles Luciano, who is considered the founder of modern organized crime in America? Anybody?
Bugsy.
No. Lucky, that is correct. Luciano, Bugsy. Give me a break. Okay, Robert, one quick thing before we get into yours, because I know people are clamoring. For yeah, come on, where's that question? We did.
Well, we know one person is.
Okay, wait, one person me. Okay, last week we did have a special trivia question where the winner won an overnight stay at the Sanctuary Beach Resort in Monterey. So get this, all right? Ready? Relax, rejuvenate, and unwind. Experience the tranquil ambiance of Sanctuary Beach Resort in the heart of Monterey Bay. To plan your getaway to Sanctuary Beach Resort, call 877-944-3863. That's 877-944-3863. Sanctuary Beach Resort, where nature converges with comfort and style. So these guys, get this, they're going to give an overnight stay, breakfast in bed for two, and you get to use the golf cart while you're playing around on the around the resort.
Wow.
Nice, huh? Okay, so here was the special trivia question. 2 out of 5 people claim to have one of these. 2 out of 5 people claim to have one of these and say they never use it. What was it?
Stairmaster.
No.
Exercise.
2 out of 5 people have a Stairmaster? Holy smokes!
Treadmill?
Stairmaster.
Along the
No.
same line?
A Twitter account.
Oh,
And
well,
they never use
I
it.
believe that.
I believe that. I
that.
have one,
I've
and
not figured out Twitter.
I haven't figured it out either. Okay, and our winner was James in Danville. Congratulations. Okay, so now we're finally at Robert Spinoza, and here's an email we have for you. Is it possible to put down less than 20% and still get a jumbo loan? I'd like to buy something in the Bay Area, but don't quite have 20% saved up yet.
Good question. Yeah, it comes up all the time. One of the most common questions I get. And the answer is yes, you can do that. Now, there's a few things you've got to keep in mind. It highly depends on the purchase price. And when you talk about putting less than 20% down, it also depends on whether you're putting 5, 10, 15, whatever it may be. Let's use an example. Median home prices here in Marin are crazy. But let's look at a common scenario in, let's say, Silicon Valley, here in Marin County, San Francisco even, $1.5 million purchase price. Okay, if you're bringing 20% down, you're bringing $300,000 to the table in down payment. If you're a buyer and you don't have that, let's say you have 10%, RPM will still make a loan that will accommodate that. What we'll do on that is we'll use a program that has come back. It existed before the downturn, but it's back now. It's known as an equity share. And the way it works is the equity share agreement will match the down payment of the buyer. So the buyer's going to bring in this case, $150,000, and the equity share will match that.
It's an 80-10-10?
Correct, but it's not a loan. So in these scenarios where you're going to 10% down at 1.5 million or something like that, what will happen is you will take this equity share, and then when you sell the house, the equity share company will capture a percentage of the appreciation. So you don't have any payments while you hold the loan. It's not a loan again, but you don't have any payments while you have the equity share arrangement.
Okay, so they're a partner, basically.
Yeah.
And is it RPM that's actually doing this?
RPM is not the equity share company.
You just arrange it.
RPM will make the first mortgage loan.
Yeah.
So, and it's important that the first mortgage lender will permit that, of course.
Yeah.
So we have a program that'll do that. And the reason that is gaining traction here in a lot of these areas is because when you look at jumbo qualifying, you've got to remember that not only do you have the down payment requirement, you also have to have reserves post-closing. So
Sure.
if you took all, and reserves are defined as your monthly mortgage payment times any number of months. And
Yeah, they're going to make sure they're qualifying repayment.
right, and if some hardship were to befall the borrower, then they would have reserves to make that payment conceivably. So that's what's happening there. And so even if you had the $300,000 to put down in our example, you might not want to do that. Or if you did, you might fall short on reserves to buy in that range. So what the equity share is allowing people to do is not only put down less money, but also buy into a range that potentially could appreciate at a higher clip and may get them into a house that they really want to be in a neighborhood they want to be in. So
How long has that been around? This
a
arrangement?
good question on that. I know it started before the downturn, so it probably began in, I would say, 2003, 2004, and then completely went away during 8, 9, 10.
Sure.
Now we're seeing it back, and we're seeing people begin to make sense of it, because obviously, when you're thinking about conceding a portion of your appreciation, that ties directly into the investment of it being, the real estate investment itself. But you've got to look at it, the alternative of what if you don't buy the house? What if you buy in a lower price range? What if you're servicing debt? So the short answer to the borrower or to the caller's question is yes, you can do it. There are also more traditional ways to put down 10% if the purchase price is a little bit lower.
And again, what's the term generally for that? Meaning, like, is it a 5-year deal?
No, it's a 30. The company, the equity share company, is getting long-term money, so endowments, things like that. And
I was going to say it's a zero coupon bond, basically.
Yeah, they're exposed for up to 30 years.
Man.
Yeah,
Wow.
but remember,
Amazing.
they're looking at a percentage of that appreciation. So yeah, their capital is tied up, but the longer it goes, conceivably.
Gosh, I mean, because a zero coupon bond, like for treasuries, you can sell. I mean, this is going to be kind of a hard sell for them on the secondary market.
Well, there's a lot of you can look a lot into that, but believe me, they've looked a lot into.
Okay, so remind me 25 years from now to start looking, and with only 5 years to go, I'll see what kind of discount they're willing to take.
So yeah, that's the way it works, and you can do 10% down, and I'm happy to help if you have questions about that. We also, like I said, do the traditional 80-10-10 sort of situation with a home equity line of credit. You can reach me at RPM Mortgage, 415-367-5959. Yeah, happy to help with any questions related to that kind of stuff.
You have any questions for Robert?
No, listening avidly here.
So he's a very
learned a lot.
Yeah, a lot of people in the Bay Area are in this situation, believe it or not. And you talk about those purchase price ranges, and people across the country are like, ugh. But it is our reality here. When you talk about our median home price, it doesn't fit into the conventional box on lending for a lot of folks.
Robert, what do you think is going to happen as we see less? Well, first of all, the refi boom's pretty much gone.
Yeah.
So there's a lot of speculation about what banks might do in the coming months or even the coming years in terms of coming back on the market with more creative financing.
Great question, Mark. We are right now we are looking at a number of programs that help the self-employed borrowers.
That's
very important.
Yeah.
And if any of you are in that situation and you have questions about it, get in touch. It's something that will be coming shortly, and we'll have more detail about it. But also, make sense deals, because now you've got the very, very stark line between qualified mortgage and non-qualified, and lenders that are going to be playing in non-qualified mortgage space are interested in finding ways to accommodate the borrowers that have been shut out.
Nice.
So yeah, I'm optimistic about that, and I think we're going to see more exciting product come back. It'll make sense, and the pricing will be good, but it won't be stated income, and it won't be the Wild West that it was.
And also, if people are interested in getting a hold of Robert Spinoza, they can also go to the Best of Investing website. Okay, real quickly, are you guys familiar with the Glen Ellen Inn? They just finished updating the restaurant and the cottages. Very, very nice. And a getaway to the wine country is the perfect way to relax this winter. The Glen Ellen Inn Oyster Grill and Martini Bar is the perfect place for a romantic meal or a party with friends and family. Make a night of it and stay at the Glen Ellen Inn Secret Cottages. And I had taken some friends there for dinner. I don't know if you've ever eaten there, but the food is fantastic. Check them out at glenelleninn.com. Okay, I'm going to cut to another quick commercial break, and when we come back, I know we've got some interesting articles you have, and I got ones that you are not going to believe. They're going to crack you up and make you angry at the same time.
Better than butter.
Better than the Bangladesh butter. That's true. Now, every time I think of Bangladesh butter, I'm going to think of you, Mike. Okay. Silence. Okay. Here is the third and final trivia question. Which U.S. television network is known for its peacock? The first 3 callers with the correct answer win a free 3-day 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. I figured I'd have to have one easy one in there. Which U.S. television network is known for its peacock? Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. The Best of Investing is going to be coming right back with some very interesting and upsetting but funny articles.
Cool.
Okay. All right.
You want to go over any of these?
Yes.
Can I?
Oh, yeah.
Go
Bail?
Thank you very much.
Bail.
Are we
Bail's
boring
the-
you?
Bail isn't the word I would
I'll give
use.
you a ring. I'll follow up.
Oh, okay.
Yeah,
Yep.
yeah.
Please, I'd like to know more about what.
Yeah, absolutely.
Good. So we'll see you on Wednesday.
Wednesday.
Yes.
Up at your place.
Absolutely.
Okay.
Cool, man. Thanks.
We have a studio audience.
Well, Steve, we're actually going to be recording a show for Steve. He played professional baseball. He's written about 20 sports books.
What's his last name?
Travers.
Pretty sure I went to high school. Did you go
Well,
Did you go
yeah,
to
we
high
took
school at Local?
Redwood. His team. He was actually was a senior pitcher.
I recognize the name.
Well, there was
when they
a
won
Steve
the-
Travers that was a grade ahead of me at Drake, and he looks surprisingly.
Really, you want to ask him? Maybe he did go to Drake. I thought he went to Redwood, but
And he had total ADD. I thought he was retarded. I swear to God. That was before ADD was a verb. He was just like all over the place.
well, maybe he knows him. But I think he graduated in '75.
I
Should
was
be a couple
seven-
years.
Well, I don't know. It could have been just a coincidence.
Let's see what we got here.
Did you know about this? This one might be. That's kind of like right up your alley. The dark side. That they're coming back on because the bill's tied up in Congress. They're coming back for state taxes on people who foreclosed.
So is this for this year now?
Yeah.
For 14? Because I haven't heard anything about them reinstating for another year the relief of debt.
Oh,
Relief.
yeah, right. For
They're-
federal.
Yeah.
Yeah.
Now they're saying the state. So.
Okay, we got a little bit of time on this one. Okay, I got a couple of fun articles, and then we'll.
Yeah, some of the stuff we've covered before, so take the lead on it, and if we have time, we'll get into some of
Okay.
this. But
Right, you guys ready? Away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Robert Spinoza. When we get to the third final commercial break, we ask this trivia question. Which U.S. television network is known for its peacock?
NBC.
NBC, that is correct. We figured we'd throw one easy one in there.
Yeah. Well,
Okay, I promised the audience when we came back we were going to get into some articles to make you laugh and be upset at the same time. So here is this article I read. Mass killer unhappy with prison because he wants better video games. He even says here, "You're killing me. You're giving me kids games rather than I need a PlayStation 4 instead of a PlayStation 3."
I got 2 words for him: Joe Arpaio. You know, it's the guy in Arizona that feeds everyone bologna sandwiches and waits to wear pink underwear. Have you heard of this guy? He is I believe he's the sheriff.
Oh
Yeah, in Arizona. And basically he's taken away all the perks. He's like, you guys are in here for a reason, and it's not a good one, and you're going to toe my line. And every time I read an article by him, I chuckle because I think, look, I have varied feelings about all of this stuff. I don't agree with the perk thing, but the whole prison thing is a different story.
Well, he
in and of
says
itself.
he says he's being tortured.
Well,
Now this guy is serving a renewable 21-year sentence for the deaths of 77 people
Yeah, right.
in a bombing and a shooting rampage, and he says that he's going to go on a starvation hunger strike.
yeah.
And I say, let
Have at
him. we should all be so lucky to lose weight like that. Okay, so then one other quick thing I want to bring up, and then I want you guys to take it away. I saw an article about a city in Marin, which will go unnamed.
Okay.
And now here, they're requiring its city manager to start putting in for her own retirement. Okay, so that's good, right?
Right.
Pension reform. However, the city council gave her a raise to compensate. So let me tell you why
Bait
that's
and
really,
switch.
that's actually worse. Because what happens is when she gets a raise, then by the time the pension retirement,
It's
it's
higher.
based on a higher
Yeah.
amount. It would have been better to just not do anything.
Right.
So it's like, where's the pension reform? If you give someone a raise to compensate for the fact that they have to put the money in.
Yeah, there were more than a few letters to the editor about that in this week's Marin Independent Journal, I must say. Yes, just another sad attempt to try to address the problem by not addressing it or making it worse.
Making it worse, exactly. Okay, articles, guys.
Other
Geez,
than
Robert,
what
you brought in like
Who
you know,
wants
what,
it?
4 or 5 or 6 articles.
Well,
on real estate for this week.
try
Oh
to
my
come
gosh.
prepared so that we've got some cool stuff to cover. But yeah,
Well, let's start with a scary one
Yeah.
here. I like this one here. So Dan Walters of the Fresno Bee had an article titled "The Dark Side to California Mortgage Relief," and I was not aware of this. Now, of course, those of you who have, I'm not going to accuse the audience of having had foreclosures or short sales, but those people in California who lost their home either to foreclosure or sold their home via short sale,
right.
where the bank essentially took less. We all have heard about this situation where there's a taxable event when you get a relief of debt. So if you owed $1 million on your home and it sold for $800,000, there was $200,000 in debt relief, and that's considered taxable. Now the federal government, every year since I guess this started to happen, 2008, 2009, has exempted that,
Yeah,
has
right.
given taxpayers a relief from that being taxable. Apparently, that is not so the case in California for 2013.
Yeah, so it looks like there's a bill held up in Congress that would have otherwise extended the relief.
That,
Right, but because it's held up now, as we cross the tax filing threshold, some of these individuals may be impacted.
Well, are they going to make it retroactive?
Good
And in
question. I don't know.
California?
It doesn't cover it in the scope of that article.
So potentially we might have a situation where federal it might be relief,
But
but
you-
California if they tax it, that's
Or
possible.
California-
That's possible.
That's
But
possible.
you know the tax side of things better than I do. But this is it. I mean, this is a kick them when they're down sort of situation, isn't it? And unless they've recovered their financial situation and now, or like let's say they bought a new home or something like that, how do they collect on something of this nature? I mean, if you got hit with a tax bill of $200K and you foreclosed 3 years ago or something like that, how are you coming up with $200K?
Yeah, apparently this is there's
You mean the
$9
tax?
billion.
Yeah, right.
Apparently there's $9 billion in estimated debt relief just in the state of California.
Just write a check. You don't have money in the account, just write a check.
You know, I will tell you though, you do not want to owe the state of California or any of its state agencies any money. They are
they're
among
ruthless.
the toughest, and my God, it's just they're nasty to deal with.
So what will they ultimately do? Will they garnish your wages and things like
Sure.
that? Okay.
All of the
Yeah,
above.
yeah.
Oh my gosh.
It's a regular debt like everything else.
Right.
It's just like you just made a lot of money. Effectively you made a lot of money.
So another political football. We'll see what happens, whether or not our folks in Sacramento do again extend that relief, or if we start reading articles about people getting very nasty tax bills.
Yeah, that would be quite an unpleasant surprise. One of the other things I've got here, it's sort of on the other end of the spectrum, and I believe we've covered this on the show before, but it's about student debt and how, over the last few years or decade, whatever you want to call it, students have taken on an untold amount of debt, and now as they enter the workforce and hopefully enter the housing economy, this student debt affects their ability to get a loan. So first-time buyers have customarily contributed to a big segment of the home buying population, and with laws or regulations regarding mortgages more stringent than they were, you've now got a situation where some of these folks are not going to qualify because their loans are either not deferred for a long enough period of time, or their payments on the existing loans are such that it's impacting their debt ratio. Because remember, one of the key components of qualifying for a loan now is the ability to repay provision. And so lenders are, in some cases, held to a very strict debt-to-income ratio. They don't have an allowance to go above and beyond that. And when you've got student loans there, they're not going away either. So you're in a really tight situation. You obviously want these individuals to come into the real estate economy because that has a lot of implications down the road that are beneficial. But
Absolutely.
yeah, I mean, if you take them offline because they're saddled with student loan debt. So it's something I see the industry talking more about, and they're looking at it. But yet, on the other hand, you have the FHA saying they may tighten up the guidelines for deferment. Typically, if you have an FHA loan and you've got the deferral on the payment of your student loan that goes beyond a year, they're not going to count that. But now, if that goes away, obviously they will. So they'll need to get a payment number on that loan.
So that's an interesting twist to a statistic I heard about at a real estate conference that I went to that talked about some of the reasons why this particular speaker believed the real estate market would actually be very strong in 2014. And one of the reasons he cited was these under these people between 20 and 30 who live at home with their parents who are now looking at, okay, it's time to go out and move out. Well, that might be offset a little bit because a lot of those folks do have student loans.
Yeah, I think
that is an issue with their DTI ratio.
Their debt to income ratio, right? I think what Mike was saying is really fascinating too, because when I think that there is going to be a shift in the way people think about all this now, as the most recent recession gets behind us. We have to assume that a generation's thinking will be changed by that. And so the generations before that influenced a lot of us, that's the younger generation, they're going to see things through a new lens. And I think that the student loan debt, and I think that thinking through retirement and purchasing real estate are all components of that. And we've not yet realized exactly what their mentality will be, nor has the housing economy that we see. I think what we see right now is still, here in the Bay Area, you've got high-tech people that have done well. They studied in the field that they're working in now. They work for a fast-moving high-tech company. They've got the money to spend on a piece of property, and they want to be in a certain area. So they'll make that leap. But that's not across the country. That's not everywhere. And I think these stats reflect a nation as a whole, not just the California Bay Area.
Absolutely. Another interesting article, Robert, you brought in here that I thought was noteworthy. We talked a little bit earlier about, when I was talking about the type of loans that we make and why private money lending has been on the rise because you can, as a buyer of real estate, you can go in and make basically a no-frills offer, a quick close offer, and use private money to close that. Here's an article that was in the Wall Street Journal titled "The Alchemy Behind a Winning Bid."
Yeah.
The Wall Street Journal used the word alchemy in it. Alchemy behind a winning bid. They're so stuffy over there. So here's it talked about how to basically homes that had the successful bid. What it doesn't say is in this particular article is how many homes that they surveyed, but let's assume there were a lot. So all cash was the winning bid in 31% of the offers. Pre-inspection, 71%. Waived financing contingency.
So you go in and say, no matter what happens, if I'm getting a loan or I'm not getting a loan at all,
Right.
I'm good for the
Waived financing contingency was 63%. That's a huge number.
See, I got to figure that some of the sellers are realizing, it's kind of getting difficult now.
Yeah. Sellers don't want to deal with the loan.
Yeah,
right?
they just say, what are the odds this guy's going to get a loan?
Right.
You know what, if you're all cash, I'm
Right.
there.
Or just not necessarily all cash, but just no financing contingency. Now here was the largest percentage, which surprises me. They waived the inspection contingency. 74%
Wow.
waived the inspection contingency.
Well, it sounds like a frenzy, really.
Yeah,
Well,
that's a little scary.
And my comment off the air with Robert was that because I make a lot of loans to contractors and rehabbers who are borrowing money from me to buy a house that they want to remodel and flip, I know that a lot of those guys, they're good, but when you do substantial remodel, there's stuff that oftentimes needs to be taken care of, and so you're waiving the inspection contingency. What that basically means is I don't see anything in the house that I want you to change before I'll buy it. Well, then you move in and it's like this doesn't work, that doesn't work. It's
settling.
Well, hopefully the contractor's gone through the house enough.
Well,
one thing, inspection.
One ad I want to have on that article is I think a lot of home buyers out there now, because of the frenzy, have been discouraged. And I think, I keep getting beat by all cash offers. I say keep your wits about you, and even if you're getting financing, have at it and keep making offers if you like the property, because all cash is 31%. So if you don't know if that all cash offer is lower than the offer you're making with financing. And a lot of us in the lending industry, look, one of the best compliments I can get from a real estate agent or amongst real estate agents is he's good as cash. Meaning that this guy is going to perform. He's going to get the loan done for you. And if you're working with a lender like that, you may find that you have an edge over all cash.
Great. Thanks, guys, for being with us yet again. Here's our thoughts for the day. Mark Twain said, when your friends begin to flatter you on how young you look, it's a sure sign you're getting old. And Mae West said, save your boyfriend for a rainy day. And another in case it doesn't rain.
She had some great lines.
She definitely did. They're her and W.C. Fields. Tune in next week to the Best of Investing. We're going to be giving away, how many? 9 more free vacations for answering trivia questions. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. That's my famous pen.
That's right, the rubber pen.
Right? Yeah, rubber pen.